Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets hidden within financial reports. And today we have quite the treasure trove from Fidelity Advisor Series I. Get ready because we are diving deep into the financials of several of their funds. And trust me, there are some numbers here that absolutely demand our attention. We are essentially looking at an annual shareholder report as of the 31st of October 2025, and it covers a ton of information about different funds within this series. Think of it like a yearly checkup for these investment vehicles, detailing how they performed, what affected them, and where their money is actually going. So what is the big story here? Well, the market in general for US stocks had a pretty good run leading up to October 2025. According to the S&P 500 index stocks, saw a strong gain that extended a pretty fast rebound. Supporting this were solid corporate fundamentals, a resilient economy, and crucially, the Federal Reserve started cutting interest rates for the first time since late 2024. However, within the funds themselves, things get a bit more nuanced. For example, in the Fidelity Advisor Value Fund security selection was a main drag on performance compared to the Russell Mid-Cap Value Index. This was particularly true in the industrial sector. Financials and healthcare also contributed to this setback. Now let's talk specifics. One big detractor for performance was actually avoiding Robinhood markets. Yes, that Robinhood. It was a component of the benchmark index and it surged by a whopping 525%. Another miss was an overweight position in Acadia Healthcare, which dropped by 50%. On the flip side, the fund did well in places picking stocks in information technology and materials boosted its relative performance. And get this, the top individual contributor was an overweight in Western Digital, which gained 224%. This was a stake they established during this period, and it ended up being their biggest holding. Looking at the long-term cumulative performance for the Fidelity Advisor Value Fund Class Z shows an initial investment of $10,000 ending up at over $22,000 by 2025. That is a pretty solid return over the years. But where is the money going? The largest market sector invested in is industrials at over 20%. Then you see financials at 14.5% and healthcare at 11.8%. They also have significant investments in consumer discretionary and energy. Geographically, the fund is heavily focused on the United States at over 89%, followed by Canada at 5.2%. Their top holdings include Western Digital Corporation, PGIAMP, E-Corporation, and Eversource Energy. Now let's talk about costs, because nobody likes paying too much, especially for investments. For the Class Z shares of the Fidelity Advisor Value Fund, the cost for a hypothetical $10,000 investment came out to $70 or 0.68% of the investment. Other classes like Class M had higher costs at $136 or 1.32%. Class C was the most expensive at $188 or 1.84%. This just goes to show how important it is to look at the specific share class and its associated costs. It can make a real difference over time. The fund size itself is over $322 million. The number of holdings is 271, and the portfolio turnover rate is 68%. This means they bought and sold about 2/3 of the fund's holdings over the year, which can indicate an active management strategy, often aiming to capitalize on short-term market movements or to replace underperforming assets. Now let's shift gears to the Fidelity Advisor Capital FundIAMP Income Fund. This fund is focused on high-yield bonds, and guess what? They also saw strong gains for the year ending October 2025. This was driven by falling yields, compressed spreads, a steady economy, and those Federal Reserve interest rate reductions. Within this high-yield bond fund security selection was the primary contributor to performance led by technology and electronics, followed by basic industry and telecommunications. Top individual contributors included an overweight in EcoStar, which gained 50%, and a non-benchmark stake in Comfort Systems USA, which was one of their biggest holdings. Looking at their investments, they have a significant portion in below investment grade bonds. Specifically, B-rated bonds make up almost 25% of the fund, with BB-rated bonds at 18.3% and CCC-rated securities at 10%. This indicates a higher risk profile consistent with high-yield bonds. Equities make up about 21% of the fund, and short-term investments and net other assets liabilities account for about 15.6%. The geographic diversification is heavily weighted towards the United States at over 91%. Their top holdings are quite interesting, including Fidelity Private Credit Company LLC at 2.2%, EchoStar Corporation at 1.9%. and Transdig Incorporated also at 1.9%. For the Class Z shares of this fund, the cost for a $10,000 investment was $63 or 0.59%. Other classes like M had a cost of $100 or 0.94%, and Class C was $179 or 1.70%. Again, class differences matter. One notable change mentioned is that the fund's name changed from Fidelity Advisor High Income Advantage Fund to Fidelity Advisor Capital Thabatal Siamp Income Fund. This is a common practice as funds evolve their strategies or objectives over time. Finally, let's look at the Fidelity Advisor Floating Rate High Income Fund. This fund saw solid gains as well for floating rate bank loans. The market for these bounced back strongly after some initial concerns. Performance in this fund was impacted by security selection in oil and gas electronics, electrical and food products, which were detractors. However, stock picking in chemicals and plastics, along with underweights in automotive and business equipment, boosted performance. Not owning first brands, which plunged 65%, was a positive contributor. This fund is heavily invested in bank loan obligations at over 90%. The majority of these are B-rated, bringing in over 58% of the fund's net assets. This again points to a higher risk tolerance, but also the potential for higher income, which is the goal of a high-income fund. Their geographic focus is also heavily on the United States at over 91%. The top holdings here include Assurian LLC at 2.6% and Great Outdoors Group LLC at 2.5%. This is a massive fund with over $15 billion in size. The total advisory fee is substantial at over $96 million. The portfolio turnover rate is 58%, so what is my takeaway from all this? First off, Fidelity Advisor Series, I manages a diverse range of funds from value stocks to high yield bonds to floating rate loans. The financial results overall show pretty strong performance for the period ending October 2025, especially in the equity and high yield bond markets. However, it is clear that performance drivers vary significantly between these funds. Security selection was key in some, while in others avoiding or owning specific companies made a big difference. Costs are also a significant factor, and investors need to pay close attention to the specific share class they are invested in, as expense ratios can vary substantially. The risks mentioned are pretty standard for these types of investments, including market disruptions and concentration risk, but it is always smart to be aware of them. The leadership and board approvals of advisory contracts suggest a continued confidence in their management strategies. Overall, these reports are incredibly detailed and give a real peek under the hood of these investment vehicles. While the numbers can be complex, understanding the story they tell is crucial for any investor. What do you all think about these funds' performance and strategies? Let me know in the comments below. If you found this breakdown helpful, make sure to hit that like button and subscribe for more deep dives into corporate filings. And hey, join our Discord community linked in the description for more real-time insights and discussions. Thanks for watching, and we will decode another filing soon.